Dear students, welcome to Digital Learning. Today in this class, we are going to solve a problem on the chapter Holding Company Accounts. This problem will be solved in this video class. This type of question appeared in Mangalore University MCOM first semester MCOM question paper of 2022. The similar type of the question appeared there, and we will solve this problem today. Let us first of all read and analyze the problem. The balance sheet of Hari Limited and its subsidiary Suri Limited as on 31st March 2017 are as follows. The balance sheet is given here. Share capital, equity shares, general reserve. See 1/4/2016. This date is very important. Profit and loss account, provision for taxation and creditors. And on the asset side, we have plant and machinery, furniture, investment, stock, debtors, and cash at bank. Let us discuss the adjustments, the additional information given. Number one, Hari Limited acquired 8,000 equity shares in Suri Limited as on 1st July 2016 at a cost of 2,000. From this point, when we analyze this point, we can find out that majority share, we can find out the majority and minority share in this problem. See here, in the problem it is given here, there are 1 lakh rupees shares in Suri Limited. Means 1 lakh divided by 10 means 10,000 shares of 10 each, 1 lakh. That is Suri Limited. So Hari Limited acquired 8,000 equity shares in Suri Limited, means Hari Limited is the holding company, Suri Limited is the subsidiary company. And from this, what we can find out is 8,000 shares is acquired out of 10,000. Means majority share is 8,000 out of 10,000. 8 by 10 means 4 by 5. Minority share remaining 10,000 minus 8,000, 2,000 out of 10,000 total shares means 2 by 10 or 1 by 5. And date of acquisition as given in the problem is 1st July 2016, that is here. And year begins on April and ends on March. It means date of pre-acquisition period is 1/4/2016 to 1/7/2016, April, May, June, 3 months. Post-acquisition period is from July to March, 9 months. So these are the information which we can get from the first point. Then stock of Hari Limited includes 6,000 related to stock purchased from Suri Limited. Holding company's stock was purchased from subsidiary company and it is having closing stock 6,000, which follows the practice of 25% extra on the cost for determining the sales price. So this 6,000 rupees stock which is still in hand is purchased from Suri Limited and this stock is in Hari Limited. And this 6,000 has unrealized profit. That percentage is 25% on cost, which is calculated here. See here, unrealized profit 6,000, 25% on cost means 25 divided by 125. So it is given here 25% on the cost for determining the sales price. 25% extra on cost for determining the selling price. So 25% on cost means 25 by 125, 6,000. It means the amount which you get 25,000, 6,000 into 25 by 125 means the amount which you get is 1,200. This 1,200 is unrealized profit which should be deducted from profit and loss account. So keep it in mind, it should be deducted from profit and loss account and also from the stock. So this is what we understand from the second point. Third point, creditors of Hari Limited include 10,000 on account of purchase from Suri Limited. This should be deducted from, this is the intercompany owings. This should be deducted from creditors and debtors both. Profit and loss account of Hari Limited includes dividend at 10% for the year 2015-16 received from Suri Limited. So Hari Limited's profit includes dividend received from Suri Limited, that is 10% dividend, which it declared and paid after 1st July, means after acquisition. So this can be analyzed as dividend declared by Suri Limited, that is Suri Limited's capital into 10%. 10,000 is the dividend. Out of 10,000, holding company's share, that is Hari Limited share, is 4 by 5. 10,000 into 4 by 5 means 8,000 rupees. This is the capital profit, or this is the share in the dividend of Suri Limited, paid by Suri Limited. So Suri Limited pays dividend to the shareholders. As the Hari Limited is the shareholder of Suri Limited, it is having holding in Suri Limited, it will also get dividend, and the amount which it gets as dividend is rupees 8,000. What is the adjustment to be done? Deduct it from the profit and loss account, this 8,000, and also adjust in the cost of control. So from the cost of control, so when we make the adjustment, we have to deduct it, cost of control. From the cost of control also this 8,000 should be deducted. Okay. Then next point is profit during the year 2016-17 have been earned on uniform basis throughout the year. Okay, that is the percentage is uniform throughout the year. So prepare a consolidated balance sheet of Hari Limited and its subsidiary as on 31st March 2016. Submit all your working notes neatly. So anyhow, this we have calculated in this slide, and by using all this calculation, we will prepare some of the working notes or notes to the accounts. First of all, we will follow this type of method, with some calculations. Okay, first of all, we have two columns. One is capital profit, another one is revenue profit. Okay, capital profit will be adjusted with the goodwill. Revenue profit will go directly to the balance sheet. The analysis of the profit of Suri Limited. See, Suri Limited's profit. What is the profit and loss account to balance on 1/4/2016? 26,000. See here, it is given in the problem. Balance in Suri Limited's profit and loss account on 1st April 2016 was 26,000. That is what we have written here, 26,000, this amount. Then dividend for the year 2015-16, that is what we calculated now, just now. This amount, 10,000, should be deducted. Then remaining balance is 16,000 is the profit, and 16,000 is the profit. Okay, really profit as on 1/4/2016 is 26,000, but dividend if you declare, then you will get profit and loss account balance on the date 1/4/2016 as, instead of 26,000, we will arrive at 16,000, this amount. Now profit for the year you will get by deducting from the formula, that is profit at the end of the year minus profit at the beginning of the year. Profit at the end of the year is 42,000. See here in the balance sheet, this 42,000. Okay, minus beginning of the year, we have calculated now 16,000. So 42,000 minus 16,000. So 42,000 minus 16,000, you will get 26,000 rupees profit for the year. This is profit for the year, 26,000. That is 42,000 minus 6,000. This 6,000 is deducted. So now this 26,000 is divided. Profit for the year is divided into pre-acquisition and post-acquisition. Pre-acquisition is 6,000. Pre-acquisition is 1. Post-acquisition is 3. 1/4. So 26,000 into 1/1:3. 26,000 is to 1:3 means 26,000 into 1/4 is equal to 6,500. 26,000 into 3/4 is equal to 19,500. 6,500 is pre-acquisition. This is post-acquisition, 19,500. So pre-acquisition is capital profit. Post-acquisition is 19,500 is the revenue profit. Now we have in the balance sheet general reserve. 34,000. And date of general reserve is 1/4/2016, beginning of the year. It is fully pre-acquisition. So it is fully a pre-acquisition. So it is capital profit or capital reserve. So total is so now you get the total 56,500. This is 19,500 and other one is 26,500. 56,500. Okay, now we have to learn how to divide this into minority share and majority share. So here this is the 16,000 plus 6,500 plus 34,000, that is 56,500. Okay, 56,500, and here you have only 19,500, that is the amount. This 56,500 is divided into minority interest and majority interest. Minority interest, see here, this 56,500 into 56,500 into minority share is 1/5 into 1/5, you will get 11,300. So this is the 11,300 rupees, 11,300, and 56,300 500 into 4/5, that is 4/5, that is my majority share or holding company share, that is 45,200. Okay, this will go to the balance sheet. This is the capital. These two will be the capital profit. This is minority share, this is majority share, that's all. Capital profit which will be adjusted in the cost of control, adjusted from cost of control. Then here you see 19,500, you have this 19,500. This is also divided into 1/5, 3,900. If you make 19,500 into 1/5, 3,900, and 19,500 into 4/5, 15,600. This will go to the balance sheet, profit and loss account. Okay, this will go to the profit and loss account. See, this 15,600 we have written here in the profit and loss account. Now we will do the calculation of cost of control. So we have cleared the calculation of profit, and its consolidated profit and loss account is done here, that we will explain later. Third one, cost of shares acquired, this is 2 lakh. Paid up value of the share 80,000. How you get it? See the balance sheet. Cost of, this is the investment, this is the cost of investment. And how many shares they have acquired? 8,000 shares they have acquired. One share is equal to 10,000. 10 rupees means 80,000. 2 lakh investment minus 8,000 into 10, 80,000. So that is what we have done here. 2 lakh rupees is the cost of the share acquired, that is investment. From this you deduct 80,000, this 80,000. And we should also deduct this majority share in the capital profit, 45,200. That is also deducted. Then also we should also deduct the majority share in the dividend received from subsidiary company, that is 8,000. That is what we have done here. This calculation 8,000. This calculation I told you, you have to deduct it from profit and loss account and also cost of control. This 8,000. So 45,500, 200. This 45,200 is deducted here. This 8,000 is also deducted. So 80,000, 45,200, 8,000. Total 1,33,200. If you deduct, you will get 2 lakh minus 1,33,200. 66,200 is the goodwill. Okay. So we have instead of making cost of control and then set off the cost of control against goodwill, we have done it in the one step. Okay. Now minority interest. Minority interest, paid up value of the share. So 1 lakh is the 1 lakh into 1/5. Okay. 1 lakh into 1/5 means this is 1 lakh equity share, 1 lakh into minority share 1/5. So that is 20,000. Then 11,300. This is share of the capital profit. This one. See this 45,200 share of the holding company we have added here or directed here. Then 11,300 will go to the minority share, minority interest. Then 3,900, that is share in the revenue profit, that is also deducted here. So all together if you add, you will get 35,200. Instead of that, if you do share of the capital profit as total profit in the balance sheet into 1 by 5, or total revenue profit or general reserve in the general reserve, and also profit and loss account in the balance sheet, if you take 1 by 5, then also you will get this amount 11,300 plus 3,900. Total is 15,200 amount you will get. This is another method. Okay, from here we are deriving. So 35,200 is the balance minority interest. Now consolidated profit and loss account. Profit and loss account of Hari Limited in the balance sheet is 1,70,000. See here, this one. Okay, then revenue profit from Suri Limited. See this 15,200 we have taken from here, revenue profit. This 3,900 we have taken to minority interest, and 15,200 we are taking to balance sheet. So 1,85,200, 600. From this you have to deduct, as I told already, unrealized profit we have calculated in the earlier slide. Then dividend out of the 8,000, dividend out of the capital profit, 1,200 and 8,000. We will show you where it is. This is 1,200, 6,000 into 25 by 125. And this is 8,000. These two we have deducted here. So finally in the balance sheet, you will have 1,76,400 as the profit and loss account balance. Now we will prepare the balance sheet. This is very simple. Shareholders fund, all these details. Then Hari Limited's capital as given in the balance sheet 4 lakh. Reserves and surplus, general reserve of Hari Limited as given in the balance sheet. You check the balance sheet, 2,80,000. Statement of profit and loss as just now we have calculated 1,76,000. This amount that is written here. So this one 4,56,400. Then minority interest 35,200. You can write it separately or as the part of the current liability. We have written it separately. Then current liabilities, provision for tax. You check the old balance sheet as it is. You copy here Hari Limited and Suri Limited. 30,000, 10,000 and plus 10,000, 40,000. Account payable. This is Hari Limited 40,000, Suri Limited 25,000 as in the balance sheet, old balance sheet. 65,000 is the total. From this intercompany owings, it is given in the adjustment should be deducted. So 55,000 balance sheet total is 9,86,600. Next, asset side. You have non-current asset. Fixed assets you have to divide into two, tangible and intangible, as given in the problem. Plant and machinery and furniture. Hari Limited plant and machinery 4,80,000 and 90,000 Suri Limited. Furniture Hari Limited 15,000, Suri Limited 27,000. Total and write it outside. Then goodwill, as just now we have calculated in the adjustment here. Goodwill here in the cost of control heading you have 66,800. That is what we have written as 66,800. Current asset inventories. See Hari Limited 95,000, Suri Limited 42,000. From this unrealized profit, stock reserve here means unrealized profit we have calculated in the earlier slide. This should be deducted. Then account receivable means debtors. Hari Limited 60,000, Suri Limited 32,000, and total 92,000. From this intercompany owings are already told, it should be deducted. This is same we have deducted from creditors. We are deducting now here from debtors. Next, cash and cash equivalents means cash at bank. Hari Limited and Suri Limited 70,000, 20,000, 90,000. This is all the information as given in the balance sheet. So this total of the balance sheet 9,86,600. It tallies both assets and liabilities tallies. And this is the solution for this problem. Thank you for watching. We will conclude this session here. Thank you.